Hope you guys are having a great day. Beautiful weather. Had to make this video outside. So you need to know the market that you're in. It's a very simple concept. There's three types of markets. There's a bull market, a bear market, and a stagnant market that's going sideways. And if you can identify which one of these markets you're in, you're probably like 90% of the way to making a profit. And if you cannot identify what kind of market you're in a lot of trouble. Let me explain. In a bull market, things like to go up. That seems obvious, but if you don't know how to apply that to making profit, then you are going to shoot yourself in the foot. Same thing in a bear market, things like to go down, and when they do go up, they're sluggish. And when things are in a stagnant market, then they like to go sideways. Now, how does one take this information and profit from it? Well, when you're in a bull market, like when I used to trade back at the early turn of the century, so people would buy the tops of things and people would short the bottoms of things. And when I say things, I mean moves, whether it's an intraday move, a momentary move, a swing move. If something ran from $90 to $100, people were buying 100 because it was getting ready for takeoff. When you're in a bear market, just the opposite. You're looking to short the bottom. And when you're in a bull or a bear market, the further the move is going, the more you feel confident that that move will go even more, follow through even more. Now, here's the thing. For a good few years now, we've been in a stagnant market. And that's something that I wasn't used to from when I used to trade professionally, and I had to adjust. Basically, by the time you saw the move was over. And this is why a lot of people get hurt. They get trained, they may even become millionaires in a certain market. And then, like, I'm sure you have a friend you speak to and you're like, why can't you make it? You made millions 10 years ago, 20 years ago. And they're like, I don't know, I can't make money in this market. It's because their mindset is on a different market. When you are in a trade in a bull market and you're used to buying the tops and selling the bottoms, when you're in a stagnant market like this, where by the time you've seen the move is over, it can really confuse you. You should be looking for a bunch of telltale signs, some that we started discussing, some that we're going to get into, and start buying at 90 and looking to sell at 100. So it's very, very different. In a stagnant market, by the time you see the move's probably over already. Then again, we have something new in nowadays where we have these just explosive takeoffs, mostly attributed to the fact that penny stocks are taken more seriously. Smaller companies, when I was a child, you'd get a flyer in the mail, some bogus scam. That was what you thought of as a penny stock. Nowadays, penny stock is a stock that is just a smaller company, and it's really cool because you can speak to the CEO and you could speak to the person who's in charge of operations and really see what's going on. But that's not for this video. As far as this video is concerned, what's fascinating is that people get stuck because they learn how to trade in a certain market type, and even if they're successful, they can't readjust their brain. There's three different markets and they call for three different ways of trading. A bull market, you need to buy the tops. You don't need to do anything, but you're looking to buy the tops. There is no top, it just keeps going. You look at these graphs from way back when in bull markets, just Google bull markets and look at the years and look at the graphs, and they just look like rocket ships. And the same thing in a bear market or in a bear stock during a bull market. When there's a pullback, it doesn't have to be an overall market, but the concept, a bull stock in a bull market, you could be buying the tops. Whereas in a stagnant market, you need to be much more picky. You have to pick your spots very carefully because you don't want to be at the end of that move. Because if you're at the end of that move, by the way, in a bull market, there's probably still another little move to come. And then when you realize that the move is not as strong, you probably still make a profit and dump it as opposed to dumping it as a loss. Point is, very simple concept. I didn't think the video would even take this long. Know what kind of market you're in and trade accordingly. If you're in a bull market, buy. If you're in a bear market, sell. And if you're in a stagnant market, try to realize and trade it going sideways without getting married. Or like I say, take part of your profit off the table, hold the rest, but don't be buying tops. I think that's the biggest failure that a person who made their money in a bull market makes when it comes to a stagnant market. You want to call this a bull market we're in right now? I don't agree. You want to call this a bear market in it right now? I've seen a lot worse. I've renamed it stagnant. They say there's a bull market and a bear market. Hi, I'm Ari. I say there's a bull market, a bear market, and a stagnant. Sounds better than a sideways market. Anyways, have a good one. Like and subscribe. Tell your friends. God bless you.